Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we'll be talking about how to trade counter trend. Now, me myself, I spend most of my time trading with the trend. 90% of my positions are in the direction of the trend. However, under some certain conditions, which we'll go into detail in a second, I will take trades against the trend and I'll manage my trades slightly differently. But before we get into that, guys, make sure you like the video if you are enjoying the content, subscribe if you haven't done already, and hit the bell. But without further ado, let's get straight into it. So on the screen underneath our beautiful title, how to trade counter trend, you can see we've got two examples here, one left, one on the right. You can see on the left here, we're making higher highs and higher lows. So clear bullish trend here in the market. If you want to look to sell this, we're waiting for that break of structure. So we're waiting for that reversal. We need to break the structure first, give us a lower low, lower high, then we sell. However, for a counter trend, we're wanting to sell before that. Take advantage of some moves before we actually break structure, before we actually get that complete reversal. So we need to wait for evidence that the market's failing at the highs before we actually look for our trades. Now on the right, you can see an example of the market doing this. Typically when I trade, I'm looking for at least two failed attempts before I actually start looking to sell a bullish trend, counter trend move, or buy the vice versa. And as you can see here, again, another bullish market, higher highs and higher lows. Then here we failed to take out the highs once, failed to take out the highs twice, and this is what now I look to sell the market at. And as for taking profit, we want to be looking to lock in profit quite early with these moves, because again, the market is still bullish. We are trading against the trend. The trend is not in our favor, so the market could potentially come into this low here, find support and look to fly back off again. So coming into these lows here, you want to be securing profit, definitely coming to the price swing low, that's where the market could look to find its feet again, go bullish. So when trading counter trend, you want to be protecting your profits, taking your profits earlier and not being so aggressive with your targets, and potentially even looking to take partials more aggressively as well and trail stops, whatever type of management you have in the market. But when trading against the trend, you want to be a little bit more aggressive with your trade management than you would be with your normal trades, or however you normally manage your trades anyway. But when we are looking for counter trend trades, I want to look for two failed attempts, as we have here, 1 and 2. And again, this is just for counter trend move, not reversal. For a reversal, I want to see the market break through the structure here, then we can actually look at a bigger trend to the downside forming. However, when we don't have that, we want to be focusing on the highs, and vice versa with a bearish market, lower low, lower high. If you start failing at the lows here, that's when we can look for the buys to the upside. Not that big, let's not get too excited, but potentially move back into that prior swing high, and the market potentially could go bearish again and see some more downside. So hopefully you guys get what I'm talking about here. In terms of entries and looking to enter the trade, these are the areas we want to be doing it on that second failed high and on that second failed low. These are the time we want to be looking for entries and looking to enter the trade. And if you want to find videos about specific entry techniques and entry levels, I do have videos on that. Check the Forex education playlist, link in the description. But today we'll just be focusing on how to trade counter trend, of course. So now on to some real life examples on Euro Yen, which I'll break down using this exact same strategy. So as you can see in the chart here, we've got a bullish trend in the market, higher highs and higher lows. The chart is trending to the upside, but we're looking to sell for some particular reason. So as you can see, the market's made a new high up there, started to print a new low. We've had this bullish leg to the upside. Let me zoom in a little bit. Had this bullish leg to the upside, the market's come straight back into that prior high, and what we've seen, failure to break through it. Nice rejection to the downside. So that's the first sign. That's the first sign saying that, okay, the trend could be looking to take a bit of a deeper pullback, see some more downside, and the sales are starting to look a lot better. But again, the market can still easily rally through that. The trend is still up. We haven't got any type of reversal, just a rejection showing that this trend is slowing down. So we wait for the second time, which is here. And again, that gives us triple top pattern, but essentially the market is failing to break through. This is now when you can start looking for entries. Again, we're still trading counter trend, so the logical target would be back down to these previous lows here and then look to exit the trade, because again, we could have gone bullish, but eventually the market does see a lot more downside, takes out those lows, sees another lower high, and actually has a bigger move to the downside. And we've actually got a second example straight after it as well. So we've got now a bit of a bearish trend here. So you can look at this, highs up there, the low, lower high, lower low. You can see the lower lows that the market's making. Now say we want to look for buys, but again, the structure in the market, our price swing highs all the way up here. To wait for the break of that, you can wait for the break of that, of course. We did eventually break it and the buys would have been good there to take it back up again. But you can look for entries beforehand. Slightly more risky because we are counter trend trading, but we can still find some good probable entries that will take, that will give us some good entries that we can look to take smaller positions and take the profit earlier, and then look to get even into the reversal trades later on down the road. But here you can see the market's been making lower lows, just made a new low there. Market's had a pullback, lower high, potentially could see the market continue that trend. However, as you can see, after we make this high here, the market has a nice down move, stalls here, sees a higher low, push to the upside. So this is the sign that the market is starting to slow down. It's not the same as our last example where we had the triple top pattern. Let me just clear that up for you guys quickly. So you can see we had the triple top pattern. So one test, second test, third test. So that's a little bit more obvious. We can see prices testing that level, failing to break through. We expect to see some type of reaction to the downside. However, this time the market didn't quite make it down to those lows here because again, it's very, very bullish. Didn't have quite enough energy to see a move back down to these lows. Formed a higher low and rallied to the upside. So again, with this, it's a sign that the market's slowing down, but the market by all means could still turn bearish and continue its trend. And then we get the third high low. Now this is where we can start looking for entries to take the market higher. Again, you could wait for the break of the structure, but this is a counter trend trade, which is still very high probable and gets you good entries and good smaller positions to take a profit quicker. If you want to look for, a reversal, you can use these type of entries to look for a reversal, but just beware, you're asking a lot from the market to break, through all of this structure, which yes, it did, but it's not every time you're going to see some big rallies like this. Most of the time, price will come up into resistance and the trend will probably continue and the market will react with that level. So with those levels, I highly recommend looking to take profit, manage your trade, and start using these levels as just areas to manage the trade, because if we do respect that, come back down to your entry price, take you out of the trade and the trend continues. So take your profit, take what the market gives you, and then if it does break through the resistance, then you can look to leave some in, look to scale in if you want to. You can do whatever, but you have to respect what the market is doing, which is still in a bearish trend, even though you have a bullish bias or expecting the trend to eventually move in the opposite direction. And also you can use this technique as well when the trend is down, but you still want to take smaller buys in the pullback and then look to sell it down at a later date. That's perfectly fine as well. But these are the areas you want to be looking for your entries. And again, like I said, I do have videos about entries, looking for key levels, areas to place your area of interest at and looking to enter at. So if you do want to check out those videos, link in the description to that. But this is the strategy in a nutshell, looking for those highs, looking for those lows that the market has had at least 2 failed attempts. Again, the more the merrier. Sometimes you'll see 3, 4, 5 give you many entries to take advantage of the trade. You can see here we've got a nice low there, initial low, second failure, third. That's where we take the trade for the bigger move to the upside. Find some more examples. You can see here the market failing to create new highs, 1, 2, 3. Nice move to the downside. Here as well, you've got the lower lows and the market has 1, 2, and 3. Big move to the upside, failure to continue to the downside. Here again, this is sort of like a big build up, but it's the same principle. Market's making lower lows, stalling there, failing to break through. Does make a higher low up here, so that would have been a nice place to buy. Market does have one big kind of fake move, retest the support for the bigger move to the upside there as well. Just scanning through here, again, you can see the market making higher highs, and then we get the lower highs, and then the second, third one is where you want to start looking for entries. And then here's a good example where you get many times to enter. So 1, 2, 3, 4, 5 to enter the trade, and then the market does eventually sell off. So again, this is something to go back test, go look for. Again, I don't trade this all the time, but when I'm looking to trade counter trend, this is what I look for. Reason being, it gives me good high probable trades. But I am aware that I'm against the trend, and as a swing trader, I'm always trying to look to stay with the trend, except if the higher time frames have given me some type of confluence where I know I can get a smaller trade against the trend and then start to remain bullish or bearish depending on where the trend is going. So try this out for yourself, guys. If you have found the video useful, leave a like on the video, guys, and subscribe if you haven't done already. Make sure you go and hit the bell so you don't miss out on any uploads or any streams coming out in the future. But thank you so much for watching the video. If you have found it useful as well, please drop a comment, let me know, and also let me know any other type of videos you want to see on the channel. But thank you so much for watching the video, guys, and I'll catch you all in the next one.